What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the description below where there's a link to the Rawstocks Discord where we're doing 7 days free premium membership trial. Check it out. That's where the Rawstocks callouts are happening. Also, there's a link to the Traders Helping Traders Discord where I'm also hanging out during market hours, also doing callouts for the premium members there. Once in a while, we throw a free one to the free members as well on the Tesla chat. Also, other links to the merchandise shop and other ways you can support the channel if you'd like. But really encourage you guys to check out the Rawstocks Discord. Pretty new, recently launched, having a good time over there. Nice community we're building. And also, again, the premium membership callouts, along with a lot of smart money concepts education that can be found for free in the education forum. Also, only about 50 members away, YouTube subscribers away from giving away free t-shirt or a free tank top to one lucky member. So continue to like, share, subscribe, share with all your friends. So hopefully we can get to the 500 member mark and I can give away a t-shirt. But without further ado, let's jump into the charts. We got the daily chart added. Yesterday we talked about the potential that we might push up into this order block, right? And there's a big order block here and an order block here as well. You can see that on the bigger blue order block here is on the weekly time frame. The smaller order block is on the daily time frame. We're looking for the confluence of the two, so likely that we push up into this area here without pushing higher here. We made a run at it. We talked about the potential that we might fail to deliver or we might just barely hit it. That's right around the 260 mark. We did push up. We got all the way to almost 259, and then we rejected from there. That rejection is pretty strong. Not a huge wick, but it's a nice wick. And then we continued to trade down from there. We didn't rally. So what that tells me is that we were pushing up. We had a fail to deliver. Most likely, we cycle back down to some of our higher time frame targets, maybe on the 1 hour chart, maybe on the daily chart. We have a daily fair value gap. We have I think this is a 1 hour fair value gap there. We also have the 21 SMA coming up, right? So we definitely could see price come down, test that fair value gap or test that moving average, and then continue up from there. Doesn't mean that we actually do that. We could just straight up rally and take out this order block tomorrow. That's entirely possible. But because of this rejection, I'm looking more for a slight pullback, again, down into the mid 240s or intersect this SMA, 21 SMA as it's coming up. Our RSI isn't telling us a whole lot. We're above the 50. We know that. We're above the control line. But with today's move, we're heading back down. So we might hit that control line again or that average. You know, I think it's a 14-period average on the RSI. Might come down and hit that and then continue to push up maybe into the end of the week, maybe even, further into Christmas week. Seeing us, I think our eventual target is up here in this order block. I don't think we're just going to straight reject. But we also have some other things going on that we were talking about yesterday as well. We have this trend line that we broke below, and we've tested it once, twice, now rejected it short of completely testing it. And you can see that comes all the way from back here, right? That's the trend line that came from the low in January 2023, tested it here, missed it here, okay, broke down. Now we've back tested it twice, potentially kind of a third time where we didn't quite hit it, but we'll call it a test. And so we'll see. Maybe that it rejects us again back down here. I don't expect that we're just going to fully dump like down to 227, right, or that 226 mark we were looking at this wick. I don't think that's happening quite yet. I think we're going to come back down. We're going to make one more attempt, pump into this order block, maybe reject that trend line again, or this descending resistance line. Somewhere around there, right? And that could take us all the way into the beginning of January. So we'll just have to see. Maybe it does find just a straight rejection and a sell-off, right, on that trend line. And then we'd be taking out the 21 SMA. We'd be taking out this, I think, a 1 hour fair value gap, and we'll see that on the other charts. And then from there, we would just be looking at sell-side liquidity targets at 226, right? This order block here that goes all the way down to 205. And then this order block here that goes down to 194 if we got selling off rapidly. We are seasonality-wise. We are in the Santa rally time of year. We should see stock price continue to run up. Also, we know that Tesla's been kind of lagging behind some of the other stocks. And so wouldn't be surprised, again, if we see a slight pullback, a little bit more, maybe Tuesday or Wednesday, right? That's typically what we're looking for is a high or a low. Using the quarterly theory, we're looking for a high or a low of the week to come in on a Tuesday or Wednesday. So if we start trading down and we set a new low on Tuesday, we'll be watching to see if we get a lower low on Wednesday and then a reversal. But if we set the high, if we come back up, rally up, set the high on Tuesday, we'll be looking to see if that was the move of manipulation. We might get a higher high on Wednesday and then a dump from there. But again, this 21 SMA is going to continue to move up. And so at that point, if we did start trading up, our target would be back at the 251, which is today's low. So either way, tomorrow we're inside this range. We got our range of today's high. We have our range of today's low. We can look for a breakout or a breakdown. We can enter a trade based on that and then ride it in a direction, knowing what our targets are. So let's drop to the 4-hour chart. 4-hour chart shows another fair value gap here. We did not quite get down to it. Gives us a better look at this run up into these order blocks. Didn't quite get there, fell short. It's called a fail to deliver. We cycle back down. We make another attempt to run at it. Right on the 4-hour chart, our SMA, 21 SMA is right down more close to that fair value gap that's on the 1-hour chart. We'll take a look at that in a minute. So might be that we come back down on Tuesday. We set that low into this fair value gap, and then we see it push up Wednesday and Thursday up into that mid 260s range. So those are what we'll be looking for on the 4-hour chart heading later on into the week. Okay, if we look at the 1-hour chart, again, we got our order blocks. You can see that we pumped up early in the morning, and it was just a straight meltdown basically after that. There wasn't a whole lot of opportunity to re-enter short positions. We entered a short position early. We jumped the gun a little bit, still ended up paying out nicely. But if you waited for the silver bullet, which we'll take a look at the silver bullet time macro here as we get down to the lower time frame charts. But if you waited for the silver bullet, there was a nice optimal trade entry in there, and you caught a nice move. Ultimately, we were targeting the London low and seeing if it goes any lower. There were some additional liquidity targets below the London low. We not only hit the London low, but we went even lower than that. So here on the 1-hour chart is where you can see this fair value gap. It's also right at equilibrium, right? We got discount, we got premium, we got equilibrium. We're below the 1-hour SMA, so wouldn't be surprised if we maybe see a little bit of a pop-up as the SMA comes rolling over, or if we just straight dump down into this, again, this 244, 245 down to 242 and some change. That's what I'm expecting. I'm not looking for a move down to this order block this week, down into the 230s. Could happen, but not likely. Again, there's not a whole lot of structure. We talked about this as well in some of the previous videos. Not a whole lot of structure to this move. You got a sell side target here, right? And you got some nice breakout candles, which we know will target. We have a little wick here, not a lot of structure in between this move. And then we got another fair value gap down here and ultimately an order block even further down below. So that's not going to be hard to take out these targets because there's not a lot of structure or support inside of there, right? We do have this little bit of support here that's right under the fair value gap. And then we have this support right here where we've seen a little bit more congestion, which is where we traded down to today. So we'll see if we open gap down or we see that little bit of pop up and then deliver down. I don't think we're going to make another run quite yet right at these order blocks, but it could happen. Our RSI is indicating that we're going to go lower. We're below the 50. We're trending down. So I do expect that we're going to dump down a little bit further from where we currently sit. Let's look at the 15-minute chart. 15-minute chart again shows us looking bearish. We're below the 21 SMA. We got that flush down. We saw a little bit of a pop up back to the 21 SMA. We got a nice distribution candle, displacement candle to the downside, left a little fair value gap. I thought we might trade up back up to it in this move here, or maybe even, after we got this sell off. We just didn't have any momentum to get heading even higher. And so we got a 15-minute bearish fair value gap. So that would be probably in line with a little bit of a pump into the early morning. If we were going to continue to head down, we might see that pop up, like I said, touch the 1-hour SMA, 21 SMA, and then see us pop down into here. Again, our fair value gap on the 1-hour time frame also coincides with a fair value gap on the 15-minute time frame. And so you can see here our confluence is going to be 242.20 up to 244.34. So that'd be my range of my target to the downside that I'd be looking. So we'd be taking the previous low here of Friday, right? And then we'd be heading down into the fair value gap. Now, if we get going back up to the upside, we have our liquidity target here in this wick and this order block. We also have our previous day high up here at 258.83. So that's our targets if we're heading to the upside. We can throw in a horizontal line at the top of this order block, so 255.34. Right? If we take one First, we got to take out this fair value gap in the 253 range. Then we take out 255 to the upside. Then we take out 258.73. Then we're up into that order block. So those are our above targets. Our below targets, again, are Friday's low coming in at 248.33. And then our fair value gaps confluence between the 15-minute and the 1 hour fair value gaps. So last thing I want to look at before I let you guys go for the day is our silver bullet time macro. And it was a classic silver bullet setup. I entered a little bit early. I entered over here, okay, because what I saw was a delivery. Here we delivered to a 1 hour, so that was a high time frame point of interest. So I was trying to front run the trade, thinking going into the silver bullet that we would have traded down and then back up and then down further. But instead we traded back up before we went down. So it did get a little dicey. I think it was like $100 down on the contract, but ultimately we did what I thought I was going to do, and we ended up selling off. So what I was looking for here today, in case you were wondering, is we got our London range here, right? So we have our consolidation during London range, right? And into pre-market, we get one flush to take out all of these stops here. We get our manipulation, and then we catch our distribution, right? And our distribution, when we're looking for that, we're only targeting the London low, or if it was going in the opposite direction, we'd be targeting our London high. But in today's event, we were targeting our London low. And so look at that first leg of distribution. We went right to London low. We found like a double, triple bottom kind of look. We saw a rally. We ultimately dumped down. Didn't quite get to this order block, but that would have been our eventual target if we hadn't run out of time. And then you can see that kind of like after market sell off where we're almost down to that order block. We might find support. It's a small order block, but we might find support there. I think ultimately we're going down to 248, and that could be as soon as tomorrow. We might see that pop up here on the 1 minute. We got a 1 minute, or we got the indicator showing a 15-minute fair value gap, and we have a 1 minute order block here. So we could easily pop up and then drop. So we'll be watching for those different things to play out. Now, also want to show you a little bit closer look at the silver bullet itself, so that you can see when you're trying to study and identify where to take that perfect entry if you're trying to grab it. What I saw, I called this out in the Discord rooms. I was already in my position, so I didn't actually call the perfect contract, but I called the setup. What I saw is I saw this move down here. Okay, to this, from this high, we started setting a lower high. Okay, we pushed down. We traded up to optimal trade entry, 62% to 70.5%. We hit it perfectly with a wick. We got our displacement immediately. We hit our symmetrical swing. So that could have been your first exit if you were playing it safe, right? We hit it perfectly. We came back and hit it again, and we came back and dumped a candle through it. So there's our symmetrical swing, which would have been a 258.47 down to 256.84. So basically a $2 move, which is pretty typical of Tesla for those silver bullet symmetrical swings. But if you're going for the full shebang and you were targeting your London low, which hit over here, right? Let's look at what that. Hold on, let's get that fib tool back up. There we go. Let's look at what that ended up providing as far as, let's just say you didn't get perfect entry, stop above previous high, trading down to London low. Where is that? Here's our London low. Ended up being an 11.74 to 1 risk reward ratio. And it ended up being almost a $5 move. So if you ended up trading it all the way through to London low, you got a really nice trade in there. But even if you took the little perfect entry to the symmetrical swings, was still a nice trade for the silver bullet. There's no guarantee that we're going to get all the way there, but that's typically the way we try to play that, is looking to target that London low or London high. So that's all I got for you guys today. Hopefully this has been helpful. If you have any questions ever about how to trade the silver bullet or any of the other concepts that we talk about in the video, feel free to find me in Discord, find me on the social media. Don't forget we got the 7-day free trial on the Rawstocks Discord going on. And then also, if you ever want my custom indicators with my exact settings so that you can follow along on the charts exactly like we're charting, I do share my my trading view my exact trading view chart, which is through a link. And so you can find me again on the socials or on the Discord. Ask me if I can share my link, and I will share it with you. It will come with all the 8 indicators, including the RSI, including the liquidity levels, the smart money concepts by Lux Algo. It'll come with the auto trend line, the silver bullet time macro, the indicator that shows the London Open, also the SMA, the break it structure or the market structure, both the break it structure and the market structure indicators as well. So if you want that, find me, hit me up, let me know. Happy to share it with you. All right, thank you guys, and good luck on the trading on the next one.